Lately, I see so many people discussing what will be the price of Bitcoin after the halving, what will be the price of Bitcoin after the approval of Bitcoin spot ETF. Will the price go up or down? Will it be buy the rumor, sell the news? What will happen? My name is Željko and welcome to Crypto Grid channel. Today I want to address one topic that is really interesting to me and that I realized that not so many people are actually thinking of about. So now when I go on YouTube, when I go on Twitter, I see so many posts, videos and everything about like what will be the price of Ethereum during the next bull market, what will be the price of Bitcoin, and everyone is trying to give their own estimations, and you can see that there are so wide ranges. For example, for Bitcoin, you can see estimations from like 80K to 500K, and it doesn't necessarily mean that the guy who get this accurate is much better analyst. Honestly, it means that he just got more luck in this cycle. My point here is when you try to predict the price of a specific asset, is same as when you try to drive by only using the rear view mirror. I will repeat this again. So when you try to predict the price of a specific asset, is same as when you try to drive with using only the rear view mirror. So why is that? Because you can only estimate the price of a specific asset based on a previous data that you already have. And no, I'm not saying that the previous data is useless, it's actually pretty useful. I'm just saying that you can take all the factors into consideration, like looking at Sharpe ratio, looking at volatility of different assets, taking the macro picture into consideration, previous events and everything, and still somebody might invest in some meme coins and pull much higher returns than you do. Also, this doesn't mean that he or she is a better investor than you, it just means that they got way more lucky than you. And these things and these events happens once in a lifetime, so it's also a thing that you need to take into consideration. When you look at the most successful investors through the history, majority of them try to spread their money across various asset classes because it always happens that one class overperforms and another class underperforms, and then they can pretty much rebalance their portfolio to take the advantages of the assets that are performing well and wait for the time when the others will perform well also. And this allows them to transfer the money from one asset to another and always take and cash out their profits. And this is what I suggest you to do in the crypto markets as well. Yes, you should definitely look at different market cap coins in a different way. For example, if you wait Bitcoin to 2x, you will need to wait for maybe the whole market cycle, or for example, from the bottom at like 15.5K to 31K. So it took a while to achieve that result. At some smaller cap, it might go 10x or 20x in a matter of month or something like that. But in my opinion, you should always set the levels where you're gonna take profits if the price of an asset increase. Let's say if you look at the Bitcoin, you set if the price of Bitcoin increases by 10%, you're taking out 3% of your Bitcoin position and cashing it out. So again, if the price of Bitcoin decreases, you have more capital to reinvest and to position yourself into the markets again. On this way, you won't take maximum profits once the price reaches the market top, but it will also never happen to you that the price reaches the top and then you think it will go up, and the price actually reverses, and then you think, oh, I'll wait, and then it happens that you didn't cash out your position at all. And then instead of having more money, more cash to invest into the next bear market and to position yourself for the next Bitcoin peak, then you gonna have the same amount of money, or you will actually sometimes even stay at unrealized loss for a long time. And this was happening to me as well, that I invest in some asset and I think the price will go more up, more up, more up, and then you never cash out. And this way, if you're cashing your positions partially, you're actually taking the benefits on identifying good projects, you're actually taking the benefits of entering the markets into the right time, and your portfolio and the amount of assets that you actually have will consistently grow over time. And this is the right approach, in my opinion. creating a specific point like I will sell at the top of bull market, it's a very dangerous approach because you never know if you're gonna have some kind of a super cycle where the price might reverse in the soon future, and then we have a bear market continuation, maybe instead of immediately transitioning to the parabolic move up, or maybe even that parabolic move up doesn't go that far as you thought it will go. So, in my opinion, it's a very dangerous area to be in. And yeah, you can look, for example, if we take a look into the charts, you can see how much Bitcoin price went up during the previous bull market from the bottom to the top, and then we can see some diminishing returns to the last bull market. We can compare from the top to the top as well, and we can see, let's say, if we had like 1600% here, we had 250% here. Now it's realistic to expect, I don't know, maybe 200% or something like that. But you never know when it's the point when the market will reverse. You never know if people realize that we now have a large percentage of portfolios that are currently in profit, and they might try to front run and exit on a way up instead of waiting for the price to reverse and sell once we start going down, and that move down might even be faster than the last time, for example. So pretty much don't think that you can outsmart everyone in the markets, that you're gonna just wait for the top of the market and sell it there and rebuy back at the bottom. As soon as you're happy with some of the profits that you made and you can see that you're going up to some resistance level, start selling. Also, always leave some assets since the price can always continue rallying up as well. And also always leave some dry powder as well since the price can always go further down also. For the altcoins, this is even more important since majority of them have one strong rally up and majority of them never return to these prices again. So have that in mind, and majority of them have tendency to go to zero. So in my opinion, always take the profits and switch it back to Bitcoin at the end. That is great, and it's great that we have more and more data analytics platform than we had ever in the past in the blockchain space, and it's something that's really helpful to all of us. But what happened in the past, even if that happened 2 or 3 times, it doesn't necessarily means that it will happen in the future, especially since the historical data for the Bitcoin and the whole blockchain industry is not very large. So I hope that you like the video. If you have any questions or if you like or dislike this format, please write a comment in the section below. Also, please consider subscribing. Thank you for watching. Stay strong and healthy. Bye.